understand this particular standard specifically covering only these areas, and any other areas we will not include here. Standard will clearly tell you this. And also standard will go on to give you definition of key terms. What are the words or phrases addressed in this standard, what the meaning it carries, that will also define. So as a student of accounting standards, we have to have that particular grip when we reading accounting standards. So standard for what costs are recognized as inventory cost, and when these costs are transferred to the income statement as expense. We will discuss that. And furthermore, IAS 2 excludes construction work in progress. Actually, previously we had a separate standard only for construction work in progress. Can someone tell me that what is that standard number? Which one is? Construction work in progress. IAS 11. But then after the introduction of IFRS 15, revenue from contracts with customers, what happened? IAS 11, IAS 18, they combined together and then they came up with this standard and they removed those two. So, inventory, when we discuss about inventory or when we talk about IAS 2, we will not discuss anything about construction work in progress. This is what we discussed for. Held for sale in the ordinary course of business. That word ordinary course of the business, what we are discussing. Toyota, Abdul Ghani, their ordinary course of the business is to buy and sell vehicle. So keeping vehicle in Abdul Ghani group is inventory. Whereas if you go to Taisir petrol station or Taisir service station, having a vehicle, lorry, their purpose is not to resell that lorry to outsiders. So that lorry in Taisir petrol station should be shown as a tangible fixed asset. So you got to ask the question, what is your ordinary course of business? And then in the process of production for such sale, or in the form of materials or supplies to be consumed in the production process or in the rendering of services. Now what about an audit firm? Can an audit firm have inventory? Presentation. I will call it back. So, what about an audit firm? Could you think that could the audit firm have inventory? Don't tell me the box file and A4 sheets. What their main business? Providing what service? Accounting service. So in accounting service, who are their customers? The clients. And these clients, will take one client. And how the service is being dispatched? They assign some professional staff who consume professional hours. Let's say to finish an external audit, we need 40 hours. Now, the team has finished the 40 hours and they have not yet invoiced this to the customer. So, this number of 40 hours is spent in the business. Could they forget this? They cannot forget this. They had to recognize this as part of their receivable item. Until it is got invoiced, that becomes an inventory. If that audit firm is internally a professional accounting people, they should account their professional hours like this. But don't ask me how many firms doing this. That's a different answer to tell. So, either production process or rendering of services. Now, inventory, we will not include following financial instruments. We will separately discuss how that reflects our financial statement and how the inventory implication in financial instruments. That we will not discuss under IAS 2. IAS 32, IFRS 9 and IFRS 7 as well. Biological assets such as the plantation or the animal husbandry, farms, these we will not discuss here. We have a separate standard, IAS 41. I would like to be little proud of reading IAS 41. Why? IAS 41 is the only standard copied from Sri Lanka to IAS. The accounting for agriculture initially came up, that initial idea professionally developed from Sri Lanka. So in that sense, I am very proud.
So there are a lot of plantations.
Yes. So, and how we measure? So this measurement also does not apply in IAS 2. Producers of agricultural and forest products, commodity, broker traders, these are different standards. So these we call it scope exclusion. How I measure the inventory? Now we first talked about what is an inventory. Then I need to decide how to measure the value of the inventory. One golden principle. Every accounting student in the world, without learning this, I am sure they cannot move on to the next level, any next level. But how do you measure the inventory? Inventory it's a golden, it's like a rhyme, in our childhood time, the teachers were teaching you, inventory should be measured at complete, lower of cost and or NRV. Inventory should be measured at cost or NRV, whichever is lower. Now the question is, first you need to understand this. You should measure your inventory. You take the cost, we will come to that. You also take the NRV, we will come to that as well. Then you compare which one is lowest. The lowest item will be the value. Why is that? Let's say my cost 80, my NRV 95. And prudence, we talked about prudence. Assets should never be overstated. Normally, without going into the technical discussion of what is NRV, normally when someone reading the word NRV, what is the full form? Net realizable value. When I read that, it tells me how much money that I can get by selling this. Is that right? Do we need to be special accountants to know this? We don't need to. It's a very common man word. So, now I am guessing tomorrow I can sell this item for 95. But actually my cost of this item is 80. So if you show in your balance sheet, instead of 80, if you are showing 95, that means you are overstating your assets in the books, which is against the prudence concept and which is against the best practice for accounting. Therefore, now IAS 2 coming up with special rule, special condition. You should value your inventory at lower of cost or NRV. Is that clear? Now the question is, what is the meaning of the word cost? How I define cost with regard to inventory? Any clear idea? Yeah. Switzerland cigarette manufacturing company, they have invoice price 100 real or dollars. Okay. And then This is Switzerland cigarette factory. This is Haider holding warehouse. It got to commute, it got to get transport, it got to get involved in the distribution channels and then reach here. Different process, different procedures, different requirements. You have to pay for this.
Yeah.
And then we have a word called directly attributable cost. What is the meaning of this word? Directly attributable cost, meaning if you don't incur this cost, you cannot bring that cigarette from this place to. So any directly attributable cost which is needed to have the cigarette in the warehouse are part of your cost of inventory. What do you think the examples are? Customs, insurance, transport, loading. The only golden condition is that should be directly attributable cost. So I would add this word here, directly attributable cost. How I also alternatively explain all the expenses that is needed to incur in order to have these inventories in my place and readily available for the sale or could be available to use in my manufacturing process. Sometimes think about the cigarette, how the cigarettes are introduced in Sri Lanka in the golden time. People don't know what these cigarettes are. But the British people who ruled the Sri Lanka, first what they did, they got into a vehicle, they had the cigarettes in their hand, they themselves shown how you smoke. And they throw the cigarettes on the road. People were watching what these fellows are doing. And always we have a good thinking about the white people, no? These serve smoking, or let me try. After 1 month of distribution freely, they stopped the free distribution and they distributed these to shops. So that's how it got distributed. Now here, what I wanted to say, it should be available for resale and it should be available for the purpose of continuing the production. Now you have the item, but you don't know how to assemble it. Then you got to bring an engineer, you got to bring a guy who to demonstrate how to smoke. Now what about the cost of that? His excursion, his accommodation, his food, his all formal, informal entertainments. All these costs. If you had to incur, then that also forms part of directly attributable cost. Many Chinese people, you can see in every different countries, they are coming here to demonstrate how to assemble items. You know, the pump, water pump selling here. Sometimes they bring the parts and then they have factories, they assemble. So this assembling process, you may not initially know how to do this. Then the inventors, they bring technicians or engineers from their countries. Minus, you take the total, and there are certain items we could also deduct. 3 items: discounts, rebates, and subsidies. Sometimes the government feels mercy on you and they give you rebate on the custom charges or the duty. If they feel you are uplifting the economic condition of the country, they say that, okay my friend, we will waive off the custom duty. So it would have been added already here, but then we subtract here. So all rebates. This cost is what I'm talking about. So cost we defined. This is how I define the cost. What is NRV? Net realizable value.